Yes, we are live. We are live. Good evening, friends. How are you all? Hope you had your lunch and being ready for the class. Very good, ma. So, as a part of our accounting discussions, fundamentals of accounting for CA Foundation for November 2020 and thereafter, and we are discussing accounting concepts. And in yesterday's class, we have covered accounting concepts. The first part of it, few concepts we have covered yesterday, and today we are here to cover few more. So as a part of our discussion, friends, let us jump into our topic and see what actually we can do. But before we go, please ensure that you are subscribing our channel and click the bell icon so that whenever we update any video, whenever we come forward for any live, you'll get a notification. You'll not miss anything in relation to CA Foundation and CA Intermediate. Let us start our today's class. Now, friends, yesterday we have already covered in our beginning class itself. Just a moment, I'll just correct the focus of the notes so that you can see it better. Yes, now we have already covered few aspects, friends. First one is our entity concept, which we have already covered in our class 2. In class 2 of this series we have already covered, and yesterday we have started with fundamental accounting assumptions. So as a part of fundamental accounting assumptions, we have done 3 parts. First one is going concern, second one is accrual concept, accrual system which has already been discussed in detail in our previous classes, and then we have already discussed about consistency, right? Consistency. So these are the 3 aspects which we have already covered in previous class, and now let us move on for our further session. Now today we will cover few more concepts, friends. Okay, at least some 4 to 5 more concepts we will discuss. In total I have made a list, my dear friends. Okay, I have actually made a list for the sake of, I don't know whether you are able to see it or not. I guess now you are able to see. Okay, so I made a complete list of what all to be discussed, friends. So one by one, what I will do is one by one I'll start discussing about all these concepts. Okay, probably it will take 2 more classes for us to complete all these concepts. I want you to study all these concepts in detail. Okay, first of all, let us discuss something called first of all today's discussion. Okay, already 2, 3, 4 concepts are over. Now fifth concept today that we are going to discuss will be on money measurement concept. Money measurement concept. Please put the heading, money measurement concept. Money measurement concept. As when we are discussing our accounting basics, friends, accounting policies, accounting process, we have discussed one aspect, that is you have to identify those transactions, only those transactions will be recorded, we have discussed. And even we discussed transactions means those which involves money, or which can be quantified in terms of money, or which can be measured in terms of money. Already we discussed in our very basic class, very basic discussion, we have already discussed a transaction means which involves money, or which can be quantified in terms of money, or which can be measured in terms of money. Only those aspects are to be considered. Yes, here also our money measurement concept telling you the same concept. What is that? Those aspects, those events which are happening in our business which involves money only are to be recognized by us. Those which are not involved money, those events which are not involving money, those events which cannot be measured in terms of money should be ignored. That is the first aspect that money measurement concept is telling us, which we already discussed while discussing our accounting process. Now further aspect what it is trying to tell you is, if at all you are trying to work in multiple currencies, if at all you are trying to work in multiple currencies, okay, multiple currencies means what? For example, you are an Indian company. Okay, now being an Indian company, friends, okay, being an Indian company, we will do all our accounting, all our transactions in rupees. But what did you do? You started exporting to US, friends. When you start exporting in US, you will start doing transactions in dollars. You will start making transactions in dollars, obviously. So it means if at all you see few transactions, few incomes, few expenses will be in dollars, and few expenses, few incomes will be in rupees. Correct, friends? Now if at all I start making my accounting in both in both, it looks very awkward. Correct, friends? Can you add 70 rupees and $70 and say something as 140 rupee, 140 something? Absolutely wrong. You cannot add both because rupee has a different value, dollar also has a different value. It means both these things cannot be added. When they cannot be added, when they cannot be subtracted from each other, when they are not comparable elements, why do you want to do it in both? Instead, what you do is you try to record either all the transaction in rupees or all the transactions in dollars. You do one thing here. They are trying to say either rupee. They are not trying to say that you do only in rupees. No, only in dollars. No. Either record everything in rupees or everything into dollars. Everything. It means though you do a transaction in dollars, convert into rupees and then record it, or though you do a transaction in rupees, convert that into dollars and then record it, whatever be the case, but follow only one currency, and that too preferably home currency. Preferably which currency, ma? Home currency. They are trying to say home currency means what? Home, for example, for us, India is our country and we are an Indian company. For us, our home currency, it means currency used at our home. Home means our country. Which is our currency? Rupee. Better you record that in your home currency so that your reporting, your analysis, everything will become very, very easy. Understanding, friends? So first concept is what are the transactions that are happening only must be recorded. Transactions means those involves money which can be quantified in terms of money, which can be measured in terms of money. Only those are to be considered is the first point. Second point is if at all you are dealing with multiple currencies, please ensure that you are trying to convert all the multiple currencies into single currency, and preferably which currency, ma? Home currency. Preferably which currency, friends? Home currency. Convert even either dollars into rupees. There is no rule that you should do it, but it's a recommendation that better you follow your home currency. It means convert those dollars also into rupees and do the transactions. That is what your money measurement concept is telling about. And of course, majority of the examples and everything which we have discussed in our very first class, friends, class number 1 of this series. And please ensure that you are watching that video as well at any cost. Alright, friends. Chalo, next. Let us go to the next concept, my dear friends. What is my next concept telling me? Say, for example, I will talk about dual aspect concept. This is very, 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 very interesting, important. Dual aspect concept. Okay, so what is this dual aspect concept, sir? Now, whenever a transaction happens, there will be two aspects. Dual means two aspects which will be affected. One is your debit, the other one is our credit. Debit will be affected, credit will also be affected, which we call it as a dual aspect concept. Okay, so it means not just one, two aspects will be there as a part of it, and your total of debits will be equal to total of credits. That's what they mean to say. Okay, which from dual aspect concept we can derive this as a part of matching concept. Matching concept says, part of matching concept says your total of debit should be equal to total of credits. Okay, now so we will be trying to learn both the concepts together, friends. Dual aspect and matching concept together we will try to learn. Now, as per matching concept, as per dual aspect concept, there will be two aspects in accounting. One is debit aspect, the other one is credit aspect. And matching concept says these two should be equal. Now, debits are all represented by what types of accounts, my dear friends? Expenses and assets together are represented. Assets are represented for debit. What all will be represented with credit, my dear friends? All incomes as well as all your liabilities. All incomes plus all your liabilities will be represented with credit. Correct? So now what I would like to do is I would like to actually make this, I will shuffle these aspects for some time. Okay, Nama? So what I will do, I will say expense I will take this side, liabilities I'll bring this side. Okay, so it will become what, my dear friends? So this will become assets minus liabilities will be equal to incomes minus expenses. Now everybody knows incomes minus expense gives you profit. Now this assets minus liabilities, I'll break it as liabilities into, I will call it as capital. Capital means what? Our own owner's liability, own owner's money that we have to give. plus liability I'll divide into capital plus external liabilities. External liabilities, when I say other than to the owner, to whomever we have to pay, we call them as external liabilities. Okay now friends, now if at all I reshuffle this again, I will be getting in this way. I will say assets minus liabilities. I will take capital that side. Okay, capital plus profit. Okay, now capital plus profit gives you your net capital, total capital, yes or no? So I can remake it as net capital or total capital is equal to assets minus liabilities. This is what is called accounting equation, friends. Accounting equations, we call it as accounting equation. Okay, accounting equation. Sir, what is actually this accounting equation, sir? Why we have to study this, sir? Very simple, ma. Whatever be the transaction you take, let you take any transaction, it will hold good based on this accounting equation. Understand? Actually your balance sheet has come out of this only. For example, if at all I reshuffle this again, net capital plus liabilities is equal to assets. Correct, Amma? That's why, for example, for those who know about balance sheet, already we discussed in our series. Okay, if at all we take our balance sheet, friends, we will take capital and liabilities on one side. Matching to that, we will take assets on the other side. Correct, my dear friends? Now you see, those two should be equal. Obviously, whenever you make a balance sheet, both your asset side and capital liability should be equal. Understanding, friends? So it means your balance sheet has come out of, it is an output of accounting equation. Based on accounting equation only, it has come out. Understanding, friends? Now, sir, you told something. Sir, you said any transaction will affect this balance sheet. Yes, and accounting equation will hold good. Yes, let me show you some examples. For example, let us go to our basic transactions. For example, paid salaries. What will happen, my dear friends, when paid salaries? Salaries will be our expense. Because of this expense increase, what will happen to our profit? Profit will decrease. Correct, Amma? Because salary is an expense and we are incurring a new expense. Because of it, my profit will decrease. Obviously, when my profit decrease, capital will decrease. Correct, Amma? So obviously, on my capital and liability side, my capital will decrease. At the same time, you are paying cash. When you pay cash, cash is a part of assets. When you pay, cash balance will decrease. It means on the other side, from the asset side, your cash will decrease. See, one side capital decrease, other side cash decrease, tallied again. Understand? For example, I'll take one more example. Purchased furniture. I purchased furniture, my dear friends. Now, which accounts will be affected, ma? First of all, furniture account. It is a part of assets. When you purchase a new furniture, furniture's balance will increase, assets will increase. If you observe furniture balance, what will happen? Increase. At the same time, you are paying cash or bank, right? For example, I'll take it as cash. Cash is also part of assets, and now you are paying. Because you are paying, your cash balance will decrease. When cash asset balance decreases, cash asset balance decreases. If you see on the asset, same asset sides, one is increasing, the other one is decreasing. See, again balance sheet will tally. One will increase, the other one will decrease on the same side, right? So obviously my total cash, my balance sheet will tally. Understanding, friends? This is how my accounting equation usually work, and whatever be the transaction happens, you can actually try to estimate, you try to analyze with your balance sheet, from your balance sheet. It is an art of accounting, friends. Let me practice without writing on the paper. Okay, without writing on the paper, let me see how many of you can visualize with me. Okay, just visualize a balance sheet. Okay, capital, liabilities, assets, all this stuff you visualize. What will be the transaction I say? What will happen? You try to think within yourself. Okay, think within yourself what will happen. Now, first transaction. For example, I have taken a bank loan. When I take a bank loan, what will happen? Bank loan will increase, liabilities will increase. So in your mind, assume in your balance sheet, liabilities side, bank loan will increase. Okay. On the other side, you will get that money to your hand. When you get that money to your hand, obviously on the asset side, cash or bank balance will increase. It means liabilities side, bank loan will increase. Asset side, cash or bank balance will increase. Tallied. For example, I purchased goods. When I purchased goods, purchasing goods is a part of my expenses. When I make new purchase, what will happen? Expense will increase, profit will decrease, capital will also decrease. It means visualize. One side capital will decrease, the other side cash will decrease because you will pay for it. Sir, you can ask me, like, sir, if at all I purchase goods on credit basis, sir, no problem. One side capital will decrease because purchase is a part of my expenses, expense increase, profit will decrease. Because profit decreases, capital will decrease. Other side, creditors will increase on the same liability side. Correct, amma? One side capital will decrease, other side creditors will increase. Correct, amma? So what I'm trying to say is, you try to ensure that, okay, you try to ensure that balance sheet will get tallied, how it is getting affected, how our transactions are getting affected on the balance sheet is an art of understanding accounting, friends. Okay, nama? It's an art of accounting, friends. You require good enough practice. If you have good enough practice, that is a way for us to get into professional aspects of accounting, friends. Okay, nama? So what you guys do is, we have already done a lot of transactions since beginning, right? We have already done a lot of transactions since beginning. What I want everybody to do right now is take 20 such different transactions, like asset purchase, repayment of liabilities, okay, or capital, introducing new capital, making incomes, or selling of assets. Take all different types of transactions you take. Some 10 different types of transactions you take. 10. Okay. For these 10 types of transactions, friends, please ensure that you are making a balance sheet format and try to analyze which side is increasing, which side is decreasing. You have to do that. Take a screenshot, 10 different transactions. I'm leaving it to you only, ma. Okay, which transactions you will choose is your wish. Okay, ensure that you are making that balance sheet format with increase decrease concept and take a screenshot of it. Okay, take a pic of it and send it to on my WhatsApp. In the description, I've given my WhatsApp link for those who do not know about my number. Okay, so others, those who are already following in the groups, my dear friends, post it in the groups so that everybody will recheck from each other. Okay, post in the groups. All the very best. Okay, so that is our concept, matching concept and dual aspect concept together we have discussed. Okay, now friends, chalo. Okay, now coming to matching concept, there is much more actually to discuss, friends. There is much more to discuss. Let me go through that. Sorry. Sorry. Somebody is scolding me among yourself. Huh? Don't scold, ma. I'm a good boy. Okay. Don't scold. Don't scold. Hi. Just a moment, guys. What to do, ma? Wow. Something happened suddenly. Chalo, get back to our discussion. Now, when we talk about matching concept much more in detail, friends, matching concept. Okay. Now, we have already discussed that we have 4 different types of accounts. What are those? Assets, liabilities, expenses, and then incomes. We have different types of accounts. Correct, amma? Now what are they trying to say is, you can always match assets with your liabilities, sometimes assets with your incomes, sometimes assets with expenses, sometimes expenses with liabilities, expenses with incomes. Whatever be the case, you can actually have a matching with each other. For example, sir, I have taken a bank loan, sir. I have taken a bank loan. For example, 1 crore rupees of loan I have taken at 12% rate of interest. 12% rate of interest. So what is my bank loan, ma? This is a part of my liabilities. But because you have a liabilities, you are supposed to pay an interest of 12%, which means 12 lakh rupees you have to pay in the name of interest you have to pay. What is this interest expense? Interest, sir, it is my expense. If you observe, where there is a liability, there is a matching expense. Did you observe? There is a matching expense. Because you have taken a bank loan, there will be an interest. You can match it. Got it, ma? Let me take one more example. Imagine I have purchased furniture. Okay, furniture. Now furniture, 10 lakh rupees I have purchased. Okay, now this is definitely part of my assets. Obviously, when you have an asset, and because it's a depreciable asset, you will have depreciation. Now, what is depreciation, ma? It's part of our expenses. Part of our expenses. Correct, ma? For example, I have 1 lakh rupees depreciation every year. See, where you have assets, you have a matching expense again. It means expense has got matching with assets also, liabilities also. Similarly, expense can be matched with incomes also. For example, you see, for example, where you have purchases. Now, purchases is a part of expenses, obviously, where you purchased goods. Obviously, it has to be matched with your sales income. Obviously, sales income. Correct, amma? So, obviously, when you have purchased goods, obviously, you would have sold it and sales income will be generated. See, expense, incomes and expense have got matching. Understand, friends? You can match an expense with an income. Imagine there are no purchase at all. Still you made sales. How? Not possible. Imagine you don't have a liability at all, but still you are paying interest expense. How? Able to understand, friends? So it means whatever we are doing in the business, they will have matching with each other. Where we are having matching with each other. And finally, when we match our incomes with our expenses, we will be getting our profit. Okay, where we match our assets with our liabilities, we get our capital. Understand? So this is how our matching concepts usually work. Especially this matching concept, friends, when you go for auditing, okay, not just studying subject of auditing, but when you really go and do an audit, friends, you will really love it a lot. Okay, you will find a lot of loopholes in your client's accounts when you are very good at matching concept. Understand? Matching concept can pull out all the errors that they have done. How is that so, sir? In our coming class, we will learn a lot, but still you try to understand the basic concepts of matching concept. Okay, Namma? So that is how matching concepts usually work. Sorry, sir. So, matching concept is done. Sorry, sir. Next. What is next we will discuss? So, I'll just put a tick mark of what we have covered so far. Okay, money measurement concept is discussed. Okay, and then we have discussed about what else? Matching concept we have discussed. Dual aspect concept also has been discussed. Dual aspect concept also has been discussed. So till now 1, 2, 3, 4, 5, 6, 7. 7 concepts we have covered so far. Okay, Nama? Maybe 7 more will be there. We'll discuss 2 or 3 more now. As a part of our very basic discussion, friends, we have one more concept called periodicity concept. Periodicity concept. Already about this periodicity concept, friends, we have what do you call periodicity concept. Okay, periodicity concept is all about in this way. Whatever be the accounting you are doing, it must be for a period. For a period. Period means what? A period can be, in our first beginning class we have discussed, go to class 1, there we have discussed in detail what all these points. A period can be a week. Okay, it can be a month, it can be 3 months, it can be 6 months, it can be year also. It can be for any period, but you have to follow periodicity. What does it mean? I'll just give you one explanation. For example, we already discussed that when we take our incomes minus expenses, this will lead to our profit. Now, we want profit for 12 months, for example, we want profit for 1 full year. Obviously, if you want to get profit for 1 full year, 12 months, expenses that you are taking should also be standing for 12 months. Obviously, your expense should also be for 12 months, as well as your income should also be for 12 months. Your income should be for 12 months, as well as your expense should also be there for 12 months. Then only the profit that you are getting will be for 12 months, friends. Otherwise, no. Otherwise, no. Understanding, friends? That is the reason, if you would have seen our accrual concept, ensure that all the incomes earned during the year must be taken whether they are received or not. All the expenses that are incurred during the year must be taken whether they are paid or not. Did you remember? We have been taking earned and we have been taking incurred depending on this concept, and this lead to which concept, my dear friends? Accrual concept, which we have already discussed in much detail in your second video, not second video, I think the fourth class, and probably in 7th class we have discussed, 6th or 7th class we have discussed in detail, we have discussed, friends. Okay, Nama? Try to understand this. Periodicity concept says you have to follow a period. For example, if you want to find out a profit for 12 months, your expense should also be for 12 months, your income should also be for 12 months. That is the reason, because these 12 months are to be taken into consideration, we have taken which incomes are earned during the 12 months, whether received or not. Understanding, friends? For example, expense also we have taken incurred, whether paid or not bothered. Understanding, friends? That is why incurred and earned are taken, and those incurred and earned lead to which concept, my dear friends? Accrual concept, which you have already discussed in detail, friends. In detail already covered. Please have a look at it. So it means accrual, the basis of accrual concept is periodicity. The basis for accrual concept is what, ma? Periodicity. Periodicity has come from matching. Periodicity has come from matching. Matching has come from our dual aspect concept. It means, if at all I have to tell you the link, friends, from dual aspect concept, matching has come. From matching, periodicity has come. From periodicity, accrual concept has come. Accrual concept has come. That is how each concepts are linked and built. Understanding, friends? That is how first dual has been built, from their matching, from their periodicity, from their accrual. That is how matching, that is how concepts are built one by one. Hope you understand? Good. Apart from all these things, one last concept that I want to discuss today is materiality concept. Materiality concept. Materiality concept. Sir, what is materiality concept, sir? Material means whatever is important for us. Whatever is important for us, we call it as material. Whatever is important, we call it as what, my dear friends? Material. Okay, Namma? So whatever is important is called material. Sorry, sir. First of all, think about this importance. Importance differs from person to person, place to place, time to time, differs. For example, friends, okay, just try to understand. Let me give you my favorite example. Imagine today you go to your parents and ask your parents, Dad, give me 10 rupees. Will he think for 110 times? 10 rupees you want, ma? Take. Will he ask you, what did you do with the 10 rupees? Show me expenses, show me the bills. Will he ask you all these things? Never. Because 10 rupees is very nominal for almost everybody these days. Correct, ma? Okay. Imagine, add 1 0 to 10 rupees. Go and ask for 100 rupees. Okay. Grown up kid. Already doing CA also. Fine. He or she requires money. 100 rupees. Go. Again, will they ask for expenses? No, they will not ask you for what purpose you have spent all these things. They will not ask you, because 100 rupees is also very nominal nature, nothing such great importance. Add 1 more 0, 1000 rupees. Dad, give me 1000 rupees. First they will think, why this fellow is asking for 1000 rupees? You will say, Dad, I want to buy books. Dad, I want to buy this. I want to buy that. If you tell expenses, okay, fine, ma, take 1000 rupees, go. No problem. 1000 rupees also doesn't matter. Add 1 more 0. Dad, 10,000 rupees. Dad, first tell me, what for you want? Tell me first. If it is really important, then only I'll give. Otherwise, I'll not give. Correct, ma? So first you have to sit and prove that you require. For example, you want to go for a computer coaching center, okay, or else you want to go for some other coaching, you want to take up online classes, you want to pay for something else, you want to buy a dress, something. Your requirements will be there. If you tell them, if you tell your father, if you justify, well, what will you do with that 10,000 rupees? He will give you. He will give you. No problem. He will give you. Correct, ma? So which 10,000 rupees? Little bit important. But still he will give you. Imagine. Add one more zero. Dad, 1 lakh. I too will come along with you. Come on. I too will come along with you. Show me what do you want to do with that 1 lakh rupees. Then only I will give you. Otherwise, no. It means 1 lakh is a bit more important for him. Importance has increased. 1 lakh rupees has increased. The value has increased. So that the importance has increased. Correct, amma? So if at all you take your father along with you, and if you prove it that if you want, then he will give you. Sorry, sir. Add one more zero. Dad, 10 lakhs. Who are you, babe? Who are you? Ask me 10 lakhs. Huh? Obviously, it will start. Correct, amma? Because 10 lakhs is such a huge amount for with due respect to a middle class family. 10 lakhs is very huge that they'll not be able to bear. 10 lakhs is very huge. Correct, amma? But imagine the same 10 lakhs is asked by Ambani's son to Ambani. For Ambani's, 10 lakhs is just after all. Frankly, with due respect to others, 10 lakhs for Ambani's is just after all. By the time Ambani take out 10 lakh rupees of cash, for example, takes off cash, by the time he counts 10 lakh rupees, he would have already earned about 20-30 lakh rupees more. His earnings, his income is like that. Okay, by the time he count 10 lakhs and give, already 20-30 lakhs would have already been earned. Understand? That is the level of their earnings. For them, 10, what if at all Ambani goes and asks for Ambani, hey, for 10 lakhs and all, don't disturb my time, don't waste my time, don't disturb me. One accountant is sitting there, na? Go tell him, take from him, go enjoy, don't tell me all these things. Yeah. See the difference. That is not important. That 10 lakhs is very big amount for me. It is very, very, very important amount for me. But for Ambani's, it is very, very nominal. What I meant to say is importance differs from person to person. From time to time also it will differ. From time to time also. Say for example, friends, imagine you wanted to buy a dress for 10,000 rupees. You want to buy a dress for 10,000 rupees. Your father will think a lot. Why is that my son or daughter requires a dress of 10,000 rupees now? But if the same 10,000 rupees dress, if you ask for your marriage, take my enjoy, because in marriage you require that grandness, grandeur is required. Obviously your parents will spend so much money for the same dress for your marriage, but they'll not spend for the same dress now. The same amount they'll not spend now. Importance differs from time to time also. Correct, ma? Like that. So what am I trying to say is, when we talk about materiality, you should know what actually is important. Importance is all about. My materiality concept says all important items must be disclosed. Must be disclosed. All the important items must be disclosed separately. Okay, I'm actually telling you in a very, very simple terminology. You have to make them in a you have to disclose them in a separately. Disclose means what? You have to show them. You have to show them. Showing means what? For example, you asked for 10,000 rupees from your father for a college tour. Okay, for a college tour. You went and came back. Your father asked for expenses. Dad, show me, son, how much, show me expenses for 10,000 rupees. I gave you 10,000 rupees for your expense, for your tour, right? Show me for what you have spent. You have shown in this way. Dad, I've spent 1,000 rupees for food, Dad. Listen very, very carefully. Out of 10,000 rupees, 1,000 rupees I've spent for food, Dad. Dad, 1,500 I've spent for rent, Dad. Accommodation, your hotel room accommodation and all. 1,000 more rupees has gone for toll gate charges, refreshment charges, etc., etc. Okay, how much happened? 1,000, 2,000, 1,000, 4,000 gone. 6,000 miscellaneous expense, Dad. 6,000 rupees miscellaneous expenses. What? For 1,000 rupees you have a name. What is that? For your transport travel expense. 2,000 rupees you have a cost. What is that? Your food and accommodation expense. For 1,000 more rupees you have a expense for toll gates and other refreshments. You have a name for all these things, but for 6,000 rupees you don't have a name. What did you do with that? What did you do with that 6,000 rupees? Yeah, definitely question will ask, because in 10,000, 6,000 is a important part, material in nature, important in nature. Correct, my dear friends? That is the reason material aspects must be taken separately like that. Understand? Sometimes immaterial items will be there. Sir, immaterial items means what? For example, what is the definition of fixed asset, friends? When I was discussing something called fixed asset, I told you fixed asset means it is an asset in which we will use it in our business. That is the definition we have seen when it comes to fixed asset. Correct, Amma? Okay. For example, buildings. Yes, we use it in our business. We use buildings to run our business. Fantastic, sir. Next, machinery. Yes, it is our fixed asset because we use it to produce goods. Fantastic. Sir, vehicles. Yes, it is my fixed asset because I transport goods in my vehicles. Fine. And that too, one more definition is these fixed assets we should be able to use these assets for more than 1 year. You should be able to use these assets for more than 1 year. Let us see. Buildings. Once you purchase a building, obviously you can use it for more than 1 year. Machines can be used for more than 1 year. Vehicles can be used for more than 1 year. Fantastic, sir. Awesome, sir. What about stapler? What about a stapler? Pins, stapler. Okay. Now, stapler, is it an asset? Yes, definitely it is an asset. Is it a fixed asset? Yes, we are using it to staple our papers, files. Correct? And also, once you purchase a staple, you can use it for more than 1 year, Namma. Definitely you can use. So, if at all you see the definition part of a stapler, it is meeting both usage also. It is meeting more than 1 year of usage. Both it is getting satisfied. Correct, Amma? But are you calling stapler as your fixed asset? No. Why? Because imagine land. You will have, for example, 10 lakh rupees land in your books. Okay. For example, furniture, 2 lakh rupees you will have in your books. Machinery, for example, 1,50,000 rupees. Stapler, 30 rupees. Compared to all these things, this is so small amount, very, very, very small amount, where its existence or non-existence, for these two, stapler doesn't matter. It means whether you write 30 rupees as a stapler as an asset, or if you do not write, doesn't matter, friends. Doesn't matter. Because now you see all these assets put together, 13,50,000 plus 30 rupees doesn't make a big difference. Doesn't make a huge difference. Doesn't make any change or difference in your decision making. Correct, Amma? So it means 30 rupees doesn't matter. But imagine you forgot to record, say, a vehicle worth about 3 lakh rupees worth of vehicle you forgot to write. You forgot. Obviously, this 3 lakh rupees existence will create an impact on your financial statements. Its existence will create an impact on your financial statements. Obviously, you should take vehicles as a material item. So, whether it is material or not, how do we actually decide? Whether its existence, it means if you show or if you do not show, in both the cases, that item will create an impact on your financial statements. It will create an impact on the decision making. It will create an impact such a way that the numbers will differ a lot. The total numbers will differ a lot. In such kind of cases, those items are called material, and those items which will not create any impact, which existence or non-existence, if you write stapler as an expense or an asset, doesn't matter at all, because the amount is such a small amount that doesn't matter at all. Such kind of items are called immaterial. Understand, they are all immaterial. Material items must be taken, shown separately, not just as a miscellaneous asset, miscellaneous expenses. Not like that. You have to show them separately. That is what our materiality concept says. Understand, friends? So as a part of our today's discussion, so till now we have covered these concepts, friends. We have to discuss so many. These are all not concepts, friends. Few things we have just 2 minutes concepts, and not concepts, little bit of understanding we need to get. Anyways, entity concept done, money measurement concept done, periodicity done, accrual concept done, matching concept done, going concern done, cost realization we have not done, dual aspect done, consistency done, materiality done. Here also materiality done. Okay, materiality done. Okay, so these are the concepts which you have covered, friends. 1 2 3 4 5 6 7 8 9 concepts are so far covered, friends. Okay, now as a concept we are left over with 1 2 3 concepts left over, 3 and a few definitions you have to see. Okay, which I guess in one more class we will be able to finish it. Probably Sunday at 4 o'clock we will have a class on these remaining concepts, and then thereby concepts will be closed. And probably I will see on Sunday, if at all I can make an extra class. What I will do is I have 2 more small concepts which will take half an hour more, okay, to complete with cost of capital and capital and revenue expenditures, and contingent assets and contingent liabilities topic. So these 2 also I will see if at all I can cover in the next class itself, so that basic discussion will be over. Basic discussions will be over, friends. Right, friends, thank you so much for your cooperation. Okay, we had about 42 minutes of class till now. Okay, please ensure that you read these concepts from your textbook once. Okay, from your first chapter, once read all these concepts from your textbook. Okay, try to understand the meanings. If you did not understand any point in the textbook, friends, once give a quick reading as though you are reading a novel. Okay, please underline those points which you did not understand. Take a pic and send it to my WhatsApp. I'll try to explain those common points which are asked by everybody. Understand, friends? So then I'll explain those concepts and explain those points also in my coming class. Okay, friends, thank you so much. We'll meet you on Sunday. Tomorrow no class. Right, friends, thank you so much, ma. Bye.